Bollinger Bands are a popular technical tool used by traders to measure the volatility of a financial asset over time. At their core, these bands help investors visualize how much a price is swinging relative to its recent average. A standard setup uses a 20-day moving average as the center line, with two outer bands plotted above and below it. The outer bands expand when price swings increase and contract when the market settles down into a tighter range. While a simple moving average just tells you the direction, Bollinger Bands give you context about the intensity of those price moves. When the bands are far apart, it indicates a high level of market activity, whereas narrow gaps suggest a period of consolidation. Remember that these tools provide historical context rather than a guaranteed signal for future price movements. Use these tools to better understand market behavior. Check our channel for more basics on technical analysis and investing. Thanks for watching.